For joining us. Your performance in quarter one was a bit subdued. The top line growth flat, profitability taking a hit, I guess because of finance costs. Any particular reason that the finance costs should have gone higher?
See, our results for quarter one is typically low because we had two major projects capitalized in last year, 2015, where our Dhankuni project and our Belgaum project was capitalized, and this was the first quarter where both the interest was captured, interest as well as depreciation. So projects being capitalized, the cost of depreciation and interest being very high, there is a very low profitability in the books. In fact, it is before the minority interest, it is negative PAT.
Mr. Mehta, in that case, this 2.5 time increase that we've seen in your finance cost this quarter, do you see it coming down anytime soon, or is it likely to sustain at these levels?
No, so this will typically remain almost similar, slightly increase because one project will get over and debt will be released. So it will marginally increase, but otherwise it will remain at the similar levels.
Okay. Paresh, the EPC revenues contracted by around 12% year on year. Any reason for that?
See, our order book has been typically around 3,000 odd crores, which is split into a power EPC order book and the road EPC order book. Our road EPC is slightly lower than the power EPC order book. This is where the challenge is. The road EPC has to be, we being primarily a road EPC player, our road order book looks lower because of the low bidding which has happened in the past 2 years. There is an increased scenario of bidding happening in the last one quarter, and we expect to ramp up the order book, and once the order book ramps up, the turnover also will correspondingly increase in the next after 2 quarters. So though now the EPC order book is low because of the low order book, EPC execution is low because of the low order book, we believe in the near future it will ramp up because we are expecting a few contracts, EPC contracts to come in our play.
So what's the current value of projects that you're L1 in?
Approximately we are L1 in a few contracts which could be totaling around 1,500 crores.
And when do we see these reflecting on your income statement? What levels of revenue and profitability growth do you see in FY16?
So probably they'll start, this new order book will start putting in some revenue in the quarter 4 of this year because it will take another 4 to 5 months to really start up on these contracts. But we continue to put our target of around 2,000 crores of execution this year in the EPC side, which I believe will succeed after this new L1s which we are hoping to execute.
Okay. The toll revenues have seen an increase, nearly 60% higher this quarter. Is that sustainable?
No, the 60% growth is more due to the new projects coming into the way, because as I said, the Dhankuni project saw a full, in the last year it was, in the last quarter it was only for 1 month, and it was not available in Q1 at all, Q1 of last year. So the visible growth in the traffic expected on the toll revenues continues to be around 5 to 6%, in certain cases 7% also. Otherwise, we expect the toll revenues to keep on ramping up as time goes by. Our peak revenues to come in the 3rd and the 4th quarter. So on an overall basis, we'll continue to make a 5 to 7% growth minimum in this year on the traffic growth over and above the traffic toll rate rise.
Okay, and finally, we've seen a big expansion in your margins. I think about 600, 700 basis points. It's now at 29%. Is this sustainable? What's your guidance in terms of your operational performance for FY16?
It would be in the range of 22 to 25%. It will not be in the 29. 29% could be only for a particular quarter when some maintenance expenses are not there. But otherwise, we believe that 22 to 25% would be what normal EBITDA margin on the mixed basis. But generally, we do not go on the mixed basis. On the EPC margins, we generally see around 11 to 12% kind of EPC EBITDA margins, and the toll project around 65 to 70% in the toll projects.
All right, sir. Thanks very much for joining in, and I hope you enjoyed the rest of your conference. Thanks very much.